A brand new trading week is preparing to kick off right behind me here at the New York Stock Exchange. And after last week's wild ride, and seriously, it was wild, it was all over the place, investors, they're now wondering if we, as in the public, will see more of the same, or will we actually see the markets have an actual direction? Because last week was a topsy-turvy one for the markets. It all started with struggling Chinese property developer Evergrande staying silent on whether or not it will pay or will be able to pay $83 million in interest on a US dollar-denominated bond that was due on Thursday. Stocks then staged a two-day relief rally beginning on Wednesday after the US Federal Reserve signaled no imminent removal of its ultra-easy monetary policy. Investors also bet that the debt crisis of China's real estate giant Evergrande would not trigger a ripple effect across the global markets, because on Monday, concerns about Evergrande hit the global markets so hard to start the week where the Dow Jones shed more than 600 points. But then on Thursday, we had ourselves a rebound. The blue chip Dow advanced 500 points. But then China affecting the markets once again on Friday, causing a bit of a crypto crash, dominating headlines after the People's Bank of China said in a Q&A that all crypto-related activities are illegal. Services offering trading, order matching, or derivatives from virtual currencies are strictly prohibited, according to the People's Bank of China, while overseas exchanges are also illegal. Of course, this led the way for a crypto slide to wind up a wild week on Wall Street, but now it's time to look ahead. Will we see yet another wild week of moves all over the place, or will we actually see the markets solidly move in one direction? Let's now take a look to see how the markets are shaping up to start off the new trading week here at the New York Stock Exchange. Now Monday kicks off on the quiet side with focus on U.S. durable goods orders. Expectations call for a read of 0.6%. Tuesday kicks off in Germany with the GfK Consumer Confidence Survey. Expectations call for a read of negative 0.7. Meanwhile, we will see focus on the U.S. housing market with the release of several key housing reports, while we'll also see the release of the September Consumer Confidence Report. Now Wednesday sees us in Europe to start with the September EU Consumer and Industrial Confidence Reports. Expectations call for a read of 13.4 when it comes to industrial confidence. Meanwhile, back here in the United States, August pending home sales figures await. Expectations call for a read of 0.4% month over month. Now Thursday is a bit of a busy session, and that begins in the United Kingdom. British second quarter GDP awaits. Expectations call for a rate of negative 1.5%. Meanwhile, in Germany, the September unemployment rate is due out. Expectations call for a rate of 5.6%. While consumer prices, they're also due out of Germany and the European Union region as a whole, while right here in the United States, second quarter annualized GDP awaits. That currently sits at 6.6%, while September Chicago PMI is due. Expectations call for a rate of 66.7. And then Friday sees us return to Germany with that region's August retail sales numbers. Expectations call for a rate of 3.7% year over year. In addition, market manufacturing PMI due out of Spain, Italy, Germany, France, the EU, the UK, and here in the United States, while keeping here in the US, personal spending, personal income due out. At the same time, we have the release of ISM manufacturing PMI. Expectations call for a read of 59.9. And at the same time, investors need to keep an eye on all of those crypto crackdowns in China, while also keeping an eye on geopolitical updates as U.S. Democrats in Congress scramble to beat a string of deadlines that hold massive stakes for both the health of the U.S. economy and President Joe Biden's sweeping economic agenda. The leaders first find themselves staring at a September 30th deadline to pass an appropriations bill before the government funding lapses. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICF.